Record. Right. Welcome, everybody. Hope everybody is well. Today, obviously, Wednesday, the 15th of J July, we're going to go through what is happening intraday time frame, macros. So just to give, everyone's probably up to date with it. If you're not, I recommend that should be there's things like X and stuff, which are probably the best place to, get any news about any kind of escalation. Now, at the moment, obviously, things are escalating quite heavily. We've got extra naval support from the US on the Strait of Hormuz. We've also got, we've had bombs obviously dropping everywhere. You've also got Qatar trying to be the diplomatic intermediary, where they are obviously trying to get, the US and Iran to have talks. Now, um, so yeah, things are obviously pretty high at the moment. Now, what's going to escalate this in regards to causing a, spike in oil, spike in, yields? It's going to be if the US actually, go into Iran. That's obviously a big escalation. And then number two, it's if Iran's been targeting, US bases. Um, but obviously, it's whether they target commercial, shipping. That's bound, for anything towards the US, So that is obviously one thing that we're going to have to probably stay pretty hot on. It is hard. It's pretty much impossible to stay up to date with everything. So yeah, we're obviously just gonna have to wait and see what happens. How it's gonna happen. Yeah, but let's obviously have a little bit of a brief outlook as to what is happening here today. Dollar at the moment is a 0.7% down. However, on the day, we're still obviously holding this area here. All right, so this area here, it held yesterday, it held today. It's been holding every day. Price is kind of trying or testing to break through this 100, 800 say area, but it isn't happening. Um, so I do still think there is more chance of the US dollar reaching this 101 with everything that's going on, as opposed to it reaching 100, 500. We'd have to have some de-escalation, in my opinion, to obviously get to this area. All right, and so that's obviously what we're gonna have to have. There was the hype, yesterday we had, softer inflation data than expected. But I still don't think that's not, it's short impact. It's, obviously negative for the US dollar, but let's face it, if any country is going to reduce their interest rates, that is good data because it's going to encourage spending. All right. Um, so that's one thing to have a look at. Oil, kind of pumped up to this 80 area, but it's holding, So this is what I mean about, well, we need some further escalation. Well, we obviously don't want it. I'd rather oil was trading down here, but for us to have an idea that there's going to be further escalation. Oil will be back trading above, 90, and you'll have, yields which are, surging higher. Remember, yields are at the height they were sort of middle of, May. All right, so they're pretty high. Dollar probably needs to catch up a bit, if I'm honest. And so let's wait and see what happens here. Gold, on the other hand, pretty much, yeah, staying grounded where it is. It's a lower time frame kind of dream at the moment on gold because we're getting obviously lots of quick movements, and we're obviously hoping that this will continue. And so that is obviously the plan. But yeah, that's we'll wait and see what happens here. The other thing to have a look at is the stock market. We got US 100 up almost 1%, SPX 500 up 0.2, and then US 30 down 0.9. But everything is trading at all-time highs. It's, stock market recently has been crazy. It's had its dip, it's pumped, it's had its dip, it's pumped, it's yeah, crazy, crazy. How's my SpaceX doing? It's still going down. I bought here. Anyway, it'll come back, I'm sure. I'm sure, I'm sure. Right, here we go. So let's have a look at what is happening here, and why, and obviously what trades we're going to take there this morning. So I am, after these kind of dailies, I've got to be going, long here. I do think there's a higher probability of us hitting 101 as opposed to obviously 100, 500. All right, so that in turn, probably AUD I'm going to stay away from today. It isn't something that I'm going to look to trade because of how intermittent gold is. All right, gold's yeah, it's been causing us not problems, but it's been it's yeah just obviously holding up Aussie as well as like I mentioned yesterday. You've got to be aware of data coming out of China. All right, so GDP yesterday, I'd say that's overall pretty good. You had their unemployment rate ticked down. Now, I mentioned this yesterday morning. I'll mention it again. Australia is key trade partners with China. So if you want a background of um, any other kind of confluences, look at the percentage of trade that any country does with any other country. So if, for example, Australia and China probably does 80, Australia probably does 80% of its trade with China, you know, so naturally, if the Chinese economy is doing good, it's going to drag up because trade partners, like anything, tend to do good together. Now, having a look at what we've got today, we've got PPI, so more inflation data in the US, and obviously we've got Empire State Manufacturing data. So these are obviously the things that we're going to be looking at this afternoon. We don't trade CAD, but obviously I would imagine that they're going to hold. I mean, look at their interest rate anyway, 2.25%. It's a lot lower than the US. It's at 3.5%, I think, something like that. So yeah, there's no kind of comparison here. So I don't think they're going to be reducing it much more. But excuse me, I might be surprised. So we'll wait and see what happens here. So, in regards to pound, what are we looking at here? This was obviously our trade from yesterday. I actually closed out here. So let's have a look at what we're going to be doing here. So, in regards to trend, I actually want to go counter trend here. We've obviously every day mark these out, all right? But we've had something like this, but I cannot, I can't see the dollar creeping much below here. So what we're going to do is allow for a little bit of a tail off here. but then a continuation. So let's also have a look at Asia. All right, Asia's here, pumped up, nicely. And then obviously we've got, London here, starting to pump up too. So daily range wise is pretty high. I mean, yes, yesterday we had a much higher daily range than obviously we normally do. I would say your average, I mean, this is probably over average. I'd say your average is about this. So yeah, 70 pips. All right. Well, if you look at this, we've already, moved what we already moved. We've already moved about 50. So as long as we're covering this range, I'm actually not too unhappy with this. All right. So I'm going to go a little bit less aggressive, and I'm going to probably look for a nice pop up into this area. Let's have a look at what we've got numbers wise. Let's go even safer just to be safe. I quite like this. Yeah, I quite like that. All right, we're targeting these highs. All right, we're obviously allowing for, potentially this range to happen. We're going to do what we normally do, and we're going to do a 25 pip stop. I think we could probably allocate a little bit more, but we'll have our TP1 a little bit higher up. Let's go for a 1 to 3. Yeah, I'd like this if I'm honest. And so that's what I'm going to allow for on GBP USD. I just want price to drift up, and then we're all good to go. And claim, right. So that is what we're kind of looking at here. Let's turn it's red. That's our SL in validation. We've then got yellow, yellow. There we go. Oh, something like that. Yellow and something like this. Yellow. Okay, cool. And then TP1, we're going to go on the top of this one here. I'm going to go a bit higher. I'm going to go here. That's what we're looking at here on GBP USD. Move these a little bit closer. There we go. Happy with that. So we're expecting price to drift into this area, challenge these two highs here, and then continue to the downside. That's what I'm expecting forward today, but I'm going to allow for a bit more than what I did yesterday. Right, let's put this in. USD trade opportunity. There we go. Perfect. Right. Next one, we are going to do Euro. Just delete this because it's annoying me. We'll do Euro. Sorry, you always have to refresh the page, which is a bit irritating. But anyway, right, Euro. So pretty similar. Let's have a look at our daily. In regards to yesterday, the range was massive. It's been struggling to move as much as everything else has. Um, if we're looking at something like this, I'd say that's probably about average. But let's allow for a little bit more. Let's allow for about 60. All right. Remember, once a trading day reaches its highest probability, there is a higher chance it's gonna return back. I mean, are we gonna pump up here? Probably not, but let's leave it on so that then we've got something to kind of work with here. I actually like the idea, especially after yesterday. I want to play it a little bit safer. I know exactly where we're gonna go. We're gonna go for 500, and we'll go for 700. There we go. So I'm actually really, really happy with this. Um, we obviously want it to come up. We'll do the same as before. We'll do 250. What if we did like 60 here? Yeah, I'm pretty happy with that as well. All right, so we're allowing price. You can see here one, two, three, four, five tests here. Might not obviously come back, but what I don't want to do is what we did yesterday, where we went a bit more aggressive. Targeted here. And then what ended up happening, our stops were obviously here. It popped up, and stopped us out, and then obviously continued to the downside. So we don't want that to happen to us this morning. So I'm going to tread a bit more carefully here, in regards to obviously what we are, looking at here. Um, let's do this. Right, cool. So yeah, that's what I'm looking at. Red. And like I said, we're obviously not mapping out trades that we want to hit. All right, that's one of the things that we shouldn't be trying to do, especially intraday is, and I think that's one of the biggest mistakes that everybody makes is they try and make trades hit when you actually, you should be doing the opposite. All right, you should be allocating where is the best price and trade for me to enter. All right, because in my opinion, if we're going to go with the dollar here, anything else we could, one, we're obviously going to have a much bigger, stop loss, and two, we've got potential to be caught, which, we don't want to be. All right. So it's better to, especially days like today, um, and, times like this where we are, a news headline can change everything. Do you know what? I do like a cup of tea in the morning, but my first coffee hits completely differently. Right. USD JPY. I'm going to put one of these in. Again, we're obviously going to allocate enough. It's been pretty slow. If we look at the lows of yesterday, the only thing I want to be is below the daily low yesterday. All right, because I do feel like we've mentioned about USD JPY, it's got a tendency to, to float, obviously float to the downside, capture a ton of pips, and then continue on. Just like this one, come to the downside, capture, and then come along. So I'm also gonna, I'm probably gonna annoy everyone, but I'm gonna play this one a bit safer too. So I'm gonna go 900 to 700. All right, because I just don't want us to get caught. So I'd like this. I'd like to have stops below. We're going to have slightly bigger stops here. Let's do 280. Let's keep it a bit tight then. 280. And let's do 600. What would that take us? Yeah, I'd be pretty happy with that one there. So I'm just expecting price to come back down into this area. We've actually got really good support of the 200 EMA here as well. So that's what I'm kind of looking at here on USDJPY. Just we probably could take it a bit higher, um, but obviously it all depends on what yields do. So right, let me just clone these. And we're all good. Make sure you get your questions ready. If you got any questions, feel free to ask me. That's the idea of these. You can ask me anything while I'm making everything up here. So, right, let me turn it on red. This one yellow, next one yellow. We will zoom out to make it a lot clearer. Yellow, and last but not least, yellow. Just doing it like this with the price uh, tags just helps me, in regards to getting the trades out quicker because you guys have got no idea how long it actually takes to. I'm gonna go here. Takes to write everything out because we've obviously had lots of price movement from this area, so that's what I am looking at here on USD JPY. So let me put this one in and then I'll have a look at the chat and answer any questions. There we go. Right, question time. Right, Greg, yields seem to be holding well. Yep, that they're holding. Remember, it's one of those things, where we can't be too biased. I mean, obviously, I would like yields to drop because I want this war to be over. But yeah, I think that yeah, we can only and this is the beauty of trading, and it's what kind of makes you a slightly better trader is being impartial to everything. Just reading what is here, just reading the data, reading what prices told you, looking for the higher probabilities. That's obviously how you can do it. Phil, can you please show me how you're working out the daily range? So I did a video on this. Scroll up in the inner circle on Saturday. I did a video, but basically, all right, let's just go on a daily here. All right, don't choose a huge candle like this. All right, choose an average candle. Yeah, because any candle that's average, all right, there's always going to be opportunity once it reaches its daily range for it to return. You'll probably see it on this one here. If we highlight this one here and I go back in time, so you see from Monday, it's just so Sunday, but that's yeah, let's leave it here. So Sunday, Monday. What's this to Tuesday? All right, let's do Tuesday. So Monday night to Tuesday, yeah? There we go. Something like this, yeah? All right, so you can see here, all right, and if we're going about 70, right? Once we're kind of reaching the bottom of a daily range, it also marries up with everything, with trend, with lots of things. Once on a day like here is at 12, once we're kind of reaching the daily range here, there is a higher probability. Now I'm not saying that this works, 100% of the time, but once you get into that realm of over kind of, sold, and if we look on a RSI here, it'll, marry up, yeah, where price is very, very over sold. Right. You can then look at, right, what, there's a higher probability because of an average daily range. So, an average daily range is over, a year, right? How much on average does GBP USD move? And yes, there's going to be a percentage where it's going to move a lot more and it's going to continue, but that doesn't change the probability of it pulling, back because obviously it's reached its average daily range. Now, I wouldn't add this in as one of your sort of initial confluences. I'd put it on as like a confluence at the end, So confluence, number four or but like So if you were looking to say buy, from here, yeah. All right. So if we were, if we were, ignore the time, ignore everything. We're looking to buy from here because we're, thinking that the US dollar's a bit, a bit weaker. So we've, set up our buy entry here. And so we've obviously used our front running confluences as, macros trend. All right. Then you might be looking at how price is rejected. You might see here that, right, you know what, prices isn't quite lining up. So you add a few technicals in. That's your number three. You might add that the 50 EMA is trading above the 200. That'll be number four. Then you can add in RSI. It's below 30. So chances are we're going to be looking to reverse. All right. Then you can also add in, right, well, there's a higher percentage of, price returning because we've reached the daily range, so that's how I would line it up. Um, no problem at all. Marco, which US government tab do you use? Which US government tab? I don't use any. So I use investing.com. I use X. I do have access to a Bloomberg terminal, but I wouldn't say that I would recommend that because it's quite expensive. If you're speaking about yields, it's this one here, US 10Y. All right, US 10Y. It's got TVC here, So yeah, but obviously remember, 10-year yields are the big money coming in to the US dollar. So right. Anyway, I'm going to end it here. Hope you guys are obviously enjoyed it. Make sure if you do have any questions after, feel free to drop me a message. It's not a problem at all. But no, no, have a great Wednesday, and yeah, let's absolutely smash it. Have a good one, team.